Okay, hello everyone, and welcome to today's Small Cap Discoveries conference call. Today on our call, we have Gordon Deans, the CEO of Aurora Solar Technologies. For disclosure purposes, Paul Andriola is a shareholder of the company. And before we get started, I want to remind all the participants that your microphones have been muted. And at the bottom of your screen, there's a chat function, and we encourage the audience to ask questions and use the chat feature to do so. I'd like to highlight that Aurora Solar is a Canadian company trading on the TSX Venture under the symbol ACU. The company's got about 105 million shares outstanding and about a 10 mil market cap. I'd now like to introduce Paul Andriola and hand it over to Gordon Deans.
Awesome, thanks, Trevor. As Trevor mentioned, we're fortunate today to have Gordon Deans from Aurora Solar. We always like to start these things off, Gordon, by having you give us a brief discussion or description of the business, and then we will pepper you with questions. So why don't you let the audience know exactly what Aurora does?
All right, thank you, Paul, and welcome everyone. So I'll just start off at a very high level to say that our market, our customers are solar cell manufacturers. Solar cell is one of the principal components of a solar panel, and the cells within a solar panel are what actually generate the electricity when sunlight strikes the panel. So solar cell manufacturing, which is primarily done in China and a few other places in Asia, they struggle to be profitable. So we supply them with quality control systems, measurement instruments, and soon to be analytical tools that I will describe later that are used for quality control. And in this case, quality control equates to, good quality control equates to better manufacturing yields and therefore better profits. So we have competition, but unlike our competition, we provide a whole solution for these needs to the customers. So that's our value proposition, and the products that we have, as I said, are a measurement instrument product line, which is used during the cell manufacturing, one of the critical process steps, and we are about to release a new software product that will be used by the plant engineers to be able to do a better and faster job of analyzing how well their production is working, taking measures to improve that, and also to troubleshoot problems as they arise. So in a nutshell, that's what the company is about. I can go on and talk a little bit about the market and so forth, but I'll leave it to you, Paul, to
why don't we sort of do that? Let's the solar industry has been gaining sort of competitive, or it's becoming more competitive. It's also electricity generated from solar power has become cheaper and cheaper, where it's very competitive with sort of traditional methods of energy production. Why don't you give us sort of the state of the union as far as the overall solar industry?
Well, okay, that's a really good prompt. The industry itself has grown dramatically in the past 20 years. Really, around the year 2000, it was very much a very specialized industry, very small, and the products were expensive. In that 20 years, the cost of a solar panel has been decreasing by about 10% a year on average. So solar has gone from specialist to general and widespread. During that period of time, it's grown at about 25% a year, CAGR. So that's an incredible growth rate. The industry now has an increase in generating capacity of roughly 120 gigawatts per year on a year-over-year basis. When I started in this business 11 years ago, that was about 5 times the size of the industry overall. So, and that's just the annual growth rate. So it's been exponential growth. For us, the market itself is roughly a $500 million a year market and growing again between 20 and 25%. That's our addressable market. The manufacturers are located primarily now in China, The other locations are South Korea, Malaysia, Singapore, and Vietnam, and a smattering of other places in Southeast Asia as well. Now, the reason why this is important to them, the products that we have, is that up until a few years ago, when the industry was smaller, much of the manufacturing was done using manual labor for moving products around in the manufacturing plant from one piece of equipment to the next in order to conduct the manufacturing. But in the markets where the manufacturing is done, labor rates have been going up dramatically, but also the scale. Now that these manufacturers are at such a high size, both the labor costs, but also just managing the labor within these large manufacturing plants they have now has become impossible for them to do. So they have started to automate more and more, which has brought them to purchasing our products, particularly the measurement instruments. The other thing they have is even though the price of the solar cells and panels has been going down 10% a year, the cost of raw materials doesn't match that. So they're having a constant profit squeeze. So they need the ability to be able to understand much, much better what's really going on in a very detailed way within their manufacturing plant in order to optimize and in order to analyze and optimize the yield in the plants. So this is much more like the advanced industries like semiconductor manufacturing, where they spend a lot of time and energy understanding exactly how things are operating and behaving at a detailed level in the plant. So that's all fairly recent in this industry. And that's what we're positioning ourselves and have positioned ourselves to capitalize on is that maturation and increased sophistication in the industry.
And so basically you're helping a company become sort of faster, cheaper, better as far as producing a better quality product with competitive advantages because you're helping them save money in doing that. Can you somewhat quantify the kind of savings, or what's the quantified benefit that the customer is going to get by using your hardware?
Well, let's take a look at a fairly typical manufacturing plant. So most of them today, a given facility would generate between 5 and 10 gigawatts of new solar cells every year. Everything in this industry is measured in watts, by the way. So on a piece basis, 5 gigawatts would equate to roughly 1 billion cells a year. So 60 to 72 typically go into a panel. So it's still quite a few panels, millions of them. The value of that, when you look at the numbers from January of this year, is roughly $600 million US in value. Of that, less than half of that is the increased value of the finished goods over the raw material. So the raw material uses up more than 50% of the value of the finished goods. And then, of course, you've got the manufacturing costs as well, and your amortization of equipment. So you end up in the end with a 15 to 20% gross margin if you're doing well in this industry. So gross margin becomes pretty critical, and small swings in that can make a big difference on your bottom line profitability. So with $600 million US a year of revenue being generated from this 5 gigawatt per year plant, most of the solar cells these days are about 21 to 22% efficient in converting sunlight, the energy in the sun that strikes them, into actual electricity. But any given solar cell may be 21.2 or 20.9%, right? So you get little variations. So a 0.5% variation in efficiency equates to $15 million US in margin in these plants. So small changes in efficiency, small changes in bumping up the average or narrowing the amount of variation make millions of dollars worth of difference to these customers. And because they're on these fairly thin gross margins and even thinner net margins, that makes a big difference to them. So this is something they're always striving to do, is to just slightly increase the efficiency. We'll get into this a little bit later in terms of our next product that's coming out this year, but one of the things they do for that is they spend a fair amount of time trying out new recipes, and it's just like a recipe you use at home in the kitchen, except in this case it's settings that are in all of the different machines they use, to see if they can just bump that up a little bit. They have to do experiments within the manufacturing plant, which uses up time and also cuts down the amount of throughput they have in the plant when they're doing those. So, but the value for them is that if it's successful, they get a slightly higher price on average for their products, thereby increasing their profit.
Wow. So, okay, so you're saying as much as a $15 million swing in sort of efficiency of these cells, what is the typical plant purchase in terms of your product? What's the dollar value that would go into a typical plant?
So it varies a little bit, but in a 5 gigawatt plant, there would be typically on a range of 20 to 25 of our measurement products going into one of those. The new software product that we're coming out later, we're going to price that on a subscription basis to move from a purely capital goods revenue model to a subscription revenue model or recurring revenue model. Mm-hmm. And with that, where we haven't finalized the pricing for that yet, but our expectation is to get 5 to 10% of the increased value that it generates in the plant. So to give you an example, that $15 million is increased value that would be generated by the use of this product.
So you think you might be able to price it in that sort of 750 to 1.5 million per year range?
That's the objective. Yes.
Per plant. Okay, that's fantastic. I know I've asked you this a dozen times before, but how many plants are there out there right now that you can sort of sell to, and what's the growth rate in terms of how many plants per year? This is growing pretty phenomenally fast.
I'll characterize the market a little bit. So I'll expand a little bit on the answer to your question, to give people a sense of kind of what the structure of the market is as well, because I think that's important to understand. So the plants vary in size. 5 gigawatts is just kind of an average size. There are some that are 10, which is big. There are some that are even, just around 1 gigawatts, which used to be huge a few years ago and now is actually small. But if you take 5 and you say, let's divide that by the total amount of capacity, in 2020 or in 2019, that would have been, 30 of those, if they were all the average size. That's 150 gigawatts. So this year that's going to grow again, between 15 and 20%. I would have definitely said 20 to 25%, but we haven't seen any indications yet. But we're being a little bit conservative at the moment because of the pandemic and just keeping an eye on those things. Most of that's in China, most of those large plants. And also, this is an industry where you don't have hundreds and hundreds of companies that make it up of equal size. There are 3 absolutely gigantic ones that comprise roughly 25 to 30% of the total manufacturing capacity. And the top 10 in the industry overall are roughly 80% of the capacity. Mm-hmm. And it's 8 of those top 10 that are our target. The reason why there's 2 of them that aren't in there, one of them's a laggard who only adopts technology when they're absolutely forced to. And the other one uses a completely different kind of technology. They're actually based in Arizona. They're a bit of an outlier, and our products are not designed for their technology.
Gotcha.
They're
I mean, can you?
10% of the market.
Gotcha. So earlier you mentioned you've got an addressable market of 500 million. Is that the hardware and software? It is. Okay. So you're looking at just trying to get a sense of annually conceivably what could the revenue be for Aurora if you had a good solid toehold into that market, and more specifically the software side, because I'm really excited about the software that you guys are developing.
Yeah. So the 500 million is what I call the instrumentation and control market. So within a manufacturing plant, you have pieces of equipment that actually produce the widgets. So in a solar cell manufacturing plant, these are typically things that perform chemical processes on the precursors to the cells, or bake them, furnaces, in order to what the engineers call it is thermally treating. Most of the rest of us say it's an oven and it bakes things. The thing is that you need to control these things. So you've got to control the temperature, you've got to control the gases, you've got to control the chemicals, so that you follow the recipes as exactly as possible, and you try to get the same result every single time out of every widget. So that's what we're in. So that's the $500 million a year market. So we address a portion of that right now with our measurement instruments. And with the software, what we're doing is we're addressing a part that has to do with what you do with the data from the instruments. So when you have the data, it's just numbers to begin with. But when you put that into the context of what's actually happening in a given machine, so where did you get the data from? Was it from one chamber or another chamber that's doing some kind of processing, and how is that chamber behaving relative to the other ones, and what's the results it's generating? And also, how are the instruments interacting with each other as well, and are they tuned to work with each other to the optimal degree? It's a little bit like an orchestra. If they've all tuned to a different version of middle C, then you're going to get a lot of noise. But if they're both tuned properly to the same lead violin, and also the conductor is making sure that they're all playing the score at the same pace and on the same page, then you get great results, right? So it's the same thing in a manufacturing facility. So the software addresses part of that 500 million, but more on the OpEx side in this case. So right now, what happens is that there are two companies out there that did a do-it-yourself version of this, where they put in millions of dollars worth of instruments and hired a lot of physicists and statisticians, and then they do that work. But most of the companies, and by the way, one of them we know told us explicitly, we're not doing that again because it's too expensive. Most of them don't do that because it is too expensive. And in this case, what we're doing is we're taking it kind of not right from inside that 500 million, but on the borderline where it goes from CapEx to OpEx, to do with being able to lessen the amount of instrument money they need to spend out of the 500K, or 500 million, I mean, and also to cover off the expenses of the statisticians and the physicists that are also expensive. So it's kind of entirely it's 100 million or 50 million out of the 500 million. It's more, we're going to address roughly a significant minority of the 500 million in terms of what they would have to spend on instruments that they won't have to, because the software is able to bridge some gaps between the instruments that they have and reduce the need for some additional ones that are used by these companies who've done it the old way. And also be able to cover off costs that they would normally have to have in terms of salaries for physicists and mathematicians to do the number crunching and run the simulations and so forth, that you use the data in order to figure out, okay, if I tweak this recipe, I get this result. So there's a fair amount of science in there. And what we're doing is we're making it, but to put it in monetary terms, we're making it more capable and less expensive for them on staffing, specialized staffing. We're reducing their need for explicit hard instrumentation in the line. That's part of that 500 million. And what we are also doing is we are making it so that when they do their tweaks and their optimizations of recipes, they don't have to spend as much time bringing machines down and thereby reducing their revenue base because they're reducing their throughput, running experiments. Much of the experiments can be virtual using our software. So they actually can continue to run the lines at full capacity.
Mm-hmm. And like all this data you're collecting, it's real time. It takes the place of, you had mentioned before, some pretty antiquated ways of testing these panels or these cells. When you describe a little bit more how it's not only different than the sort of the manual way, but maybe possibly any competitors you're facing.
So what happens in a solar, yes, I will. So what happens in a solar cell manufacturing line is that on every single production line, they test every single cell when it's finished. So what the test is they simulate a flash of sunlight, and then they test the electrical characteristics. They use that information to put them into bins. So bottom line is that the bin categories are related to how much power the solar cell can generate under test conditions. So, typically it's between 5 and 5.5 watts it'll generate. So the higher end ones will go in one bin and the lower end ones will go in another bin and in between. And there's a lot of bins. One customer has 144 different ones. The thing about this is that this generates a humongous amount of data, just an enormous amount of data. Each one of these testers, and there's multiple of them in that 5 gigawatt facility, tests 2,000 of these an hour, 2,000 cells an hour. So you've got all this interesting information about what the little variations are. And our software, what we did was we used some pretty sophisticated data mining techniques to be able to use that in combination with tracking where the wafers went as they went through the plant, because there's multiple machines at any given step in the processing chain, so that we can allocate characteristics to each of the machines in real time based on that continuous data flow of what's going on. So when I said virtual, being able to get rid of some of the costs of instrumentation, it's that ability to mine that data that gives us the means to be able to go to the customers and say, hey, you don't need to spend, it would be on the order of hundreds of thousands of dollars in order to fully instrument your line to get what these best-in-class companies are able to do with respect to the yield they get out of their lines. You can do it by putting this in using your existing cell tester as the data source, and a couple of other measurement instruments at critical points, and get the same result. When they look at that data, what they get is they get to see if machine A that does one step versus machine B that also does the same step is behaving any differently. And between the two of them, why are they different? Because they should be the same, and and the best one of the bunch. So there's always an A, B, C, and D, and E of them because we're talking about big plants. There's going to be some that are doing it better than others. Why? And our software can tell them why. And then they go and they basically center align all the machines so they're all behaving as best they can possibly make them. So that's what gets the yield higher. Normally, what you're doing is you're running special segregated batches through the various machines. And then following that through the plant to where they're finished, making sure that you're also running them through a dedicated sequence of machines in the plant to make sure that you don't introduce other confounding variables into the picture that are going to muddy the waters. And then you do an offline analysis. That's where the mathematicians and the physicists come in. And then you can go back and you can say, okay, well, now I see how the machines are different and what I need to do. But when you do that, you're running special batches. You're taking machines down. You're using less than 100% of the following machines in order to avoid introducing randomness or noisiness into the results. And it takes you usually a week, maybe a bit less, but it's more than a day in order to get the results. So that reduces the throughput, and that's where you need the staffing and you need the extra equipment and extra raw material and so forth. That's what we're saving them, is that kind of thing. Right now, they can't do it a lot, so they actually don't do as much optimization as they would like to, because it's too costly for them to do it.
Yeah.
So not only do we make it less costly, but we also make it easier so they can do more of it and they can get the better yield. So this is a little bit like the difference between cutting a tree down with an axe and a chainsaw. You're going to get more trees harvested with a chainsaw than you are with an axe.
Sure. And you guys have been working on the software for a little while. Why don't you tell us where you're at in terms of, I know you've got a couple beta customers, but what's the expected rollout and strategy as far as that rollout?
Well, a little bit earlier, Paul, when we were talking, I said second half of this year. I'm narrowing that down now to October. Mm-hmm. The reason being is that somewhat fortuitously, the largest trade show in the industry, which happens in Shanghai every year in May, has been rescheduled to October. And that fits in quite nicely. We expect to have the software ready to go at the end of the summer. So that fits in quite nicely with the timing for that. So we're going to rejig our plans for that show, and we're going to really put a strong focus on the software. We're already publishing articles in industry magazines and journals on this now. There's a big one coming out in May in a quarterly journal. We're about to start discussions with customers, but there's one we have two beta trials, as you know, that have been going on for some time, is helping us to develop the software and make sure it's got the right features in it. We've already started discussions with one Chinese customer, and we're going to start discussions with another who we've just acquired, and we're shipping products to now for the measurement products. And that gives us the opening to start the discussions with them about this product as well. So we want to have them well down the path towards being lead users in China by the time we bring the product fully to the market at that trade show in Shanghai in October.
Fantastic. We mentioned China for a bit in this conversation. Obviously, with COVID and the issues in China around that, are you seeing any impact operationally or sales-wise as far as what the COVID-19 has done to the solar industry?
Well, for us, actually, it hasn't shifted our sales pipeline in any material way. We've had 2 requests for delays in shipment by a matter of about 3 weeks. That's been the total impact so far. Having said that, I'm pretty carefully keeping my eyes on our customers' demand. We've seen, a little bit of a slowdown in that. This is for installations of solar power plants. Primary markets for that are the United States, Europe, and China. But generally speaking, the industry's done pretty well through all of this. Fortunately, we're not selling to a bunch of restaurants and other, high-touch type customers. These are infrastructure generally considered to be essential service type work because it's generating electricity is what the end goal is. And the installations have been carrying on at pretty close to the same level. I do hear anecdotally there's been some layoffs in those industries in the United States, but that's all I've heard. For us looking ahead, we're seeing some opening up again now, which is good. We do need to get people from Vancouver over to talk at senior management levels to the customers about the products in China. So I am looking forward to being able to have myself and some of the members of the team head over to see our customers face to face. We do have people in China, so it's not that there's been a serious impact on that, but we do need to bring some people also from the head office as we move into the summer and into the autumn. So the impact overall, to sum it up, has been minimal for us so far. So we're optimistic about this, and we're happy to see that. But also, I'm not saying there might not be that there's. I'm not being unrealistic about the fact that we need to keep a close eye on those things as we look ahead.
Mm-hmm. Recently, you announced another 3 units. I think you'd sold as far as the measurement instruments. Can you talk about your order book or backlog or whatever term you want to use for the orders as they stand right now, and possibly what can investors expect? Is that sort of a steady state? Do you think it could increase or decrease? What can you tell us about that?
So for this year, we're expecting. So we are typically seeing orders coming that we have visibility out, reasonably good visibility out about 6 months in this industry, and the order books, they tend to come in the range of 3 to 4 months ahead of shipment. So what we're seeing so far is consistent with what our plans have been. The expectation we have for the full year is that we'll see, a moderate increase in sales for the measurement products. What we're seeing is consistent with that. And because of the timing of the introduction of the new software product and how we're going to work with the lead customers on that, we will see a small amount of revenue coming in from that in this fiscal year. And then that increasing significantly as we go into fiscal year 2022, which starts in April of 2021. Just to elaborate on that last bit a bit, because the software product is a systems level product and the nature of it, our plan is to work with up to 2 lead customers in China very closely for the first little while to make sure that they're very successful with it. There's a very much word of mouth tradition in this industry that if lead customers, and the ones that we're looking at as being the lead customers, are within the top 3 in the entire industry, if those companies have success with something, the word gets out, and then the others all have to have it. So that's the approach we're using to build the demand for it. So it's not going to be hitting the ground and just going into multi-millions of dollars of revenue on day one. It's going to be building a very, very strong platform for the revenue, and then building that up aggressively in fiscal year 2022.
Gotcha. Of the existing plants that are out there right now, what sort of market share would you say that you've tapped into on the hardware side?
I would say that we've got roughly of the potential for those hardware products, we've got 40 to 50% market share. We have 2 competitors for those. One's a Hungarian-American company that's been around for longer than we have. They're very strong in the semiconductor industry in a variety of products for measurement. That's their primary business. And they also sell into the solar industry, particularly for laboratory equipment. They do have some inline equipment, but we've taken business away from them, including from companies in the top 10 since 2017. The other one is a Japanese company that produces an automated version of the manual tools that have been used for a long, long time for the types of measurements that we do. And while they're less expensive, it's limited in its throughput, and it also contacts the products, and therefore has the potential to cause damage, and also has to be maintained and because of wear and tear on it, unlike ours, which are non-contact. So they split the remainder. I think it's maybe a little bit heavy, or slightly more than half of that on the Japanese company.
And you may have mentioned this earlier, but give us a sense of the growth in the manufacturing capacity, because it's pretty substantial growth. And you'd think that with new plants coming on stream, they're looking for the latest and greatest products that are going to make them as efficient as possible. How fast are they growing? Yeah.
So the majority right now of the manufacturing plants were built prior to them really going full bore on the automation. All the new ones now are fully automated. So that's our market, is these new ones. But we're also beginning to see, and we've got one potential new customer that we're expecting to come in fairly soon, who is now taking those old plants that were built before automation, and they're basically refurbishing them. So they're going from people handling things and moving things around manually between machines to automating, and therefore that's beginning now. We're beginning to get basically turnover of older plants. We already have some sales into another company that's the same, right? And both this new one I just mentioned and also the older one that we've sold into, they were in the top 10 before, and because they didn't keep up, they've slipped out. Well, now they're looking to get back there again. So it's actually, very, very good looking for us in that sense, because up until 2018 in China, we were, up until last year, we were selling exclusively, with some minor exceptions, outside of China. And then in 2018, we saw the China business starting to build. We built up a sales pipeline, and we started to see that getting fulfilled in 2019. And now as we move into 2020, we're seeing some of these older players with the older plants jumping into the game as well. So it's not just the 25% growth, but it's also the churn and the renewal that we're looking at now as well. Right. So I'm pretty bullish on how that's going to contribute to our business.
Yeah, sounds good. So you recently did financing, which was oversubscribed. We participated in that. Financing was done at 10 cents. What's your current funds? What's your bank account look like, and what are your potential financing requirements over the next year to 2 years?
I have to say that when we finished the financing, which was in the middle of March, I breathed a big sigh of relief, because, of course, at this point in time, the world is just coming apart. And it was one of those rather exciting periods in my entire career, I have to say. Maybe not the kind of excitement I really wanted, but it was still exciting. So we're actually in really good shape. We just we've been shipping. So we're getting more revenue in the door, more cash. So our bank account is really solid. It's actually above target a little bit right now. It's because we're a public company, I can't get into specific numbers, but it's between 1.5 and 2 million, closer to the higher end of those numbers. And our burn rate is on track at between 250 and 300, and that's actually going to come down a little bit. We've had some one-time expenses the last little while, just associated with being a public company, and also some of the financing and so forth. And our burn rate is normally down between 200 and 250. So
that's per quarter.
And that's burn. That's, by the way, that's burn without commissions and parts costs. So that's the sort of the baseline burn. Profit margins, I know I'm doing more than answering a question, but I'm sure people are interested in this anyway. Profit margins for the measurement products are in excess of 50%. Yeah, when we do sales, we do fairly well on that.
Okay, cool. So I'm going to open it up to questions, you guys. So in 1 or 2 minutes, you feel free to start sending in questions. But really, kind of want to summarize it. The way I see the business right now is you've got a sort of a healthy hardware business that is getting you significant clients. It's if anything, it's a bit of a I won't say a loss leader, but it gets you in the door, it gets you familiar with a lot of your customers. But the real upside is this software. When you think about it, you're going to save these companies potentially millions of dollars per year in OPEX costs, and you're looking at roughly, let's call it $1 million per plant in potential revenue from that. That's got to be high margin, especially if it's a SaaS type of service. And you're selling into a very fast growing industry where they kind of need your product. This would be relatively mission critical. So, I mean, am I wrong in sort of describing it that way? High growth industry. You've already got lead clients, and you're going to hit them with another product that is significantly more profitable if once installed.
Yes. So obviously the margin on a software business will be quite high. The software will be installed in servers that we'll provide inside the plant firewalls, because they don't like that information to go into the cloud. But those servers are relatively cheap, so it's not material in terms of what that brings to us. The software license fees are the main event. Once we get the software into volume licensing, we expect the blended margins to be in the ranges of 75 to 85%. At that point, we'll be both a software and a hardware company. I might address something that somebody had asked while I'm talking about that, which is intellectual property protection, given that a large part of our market is China. For the software products, we take that pretty seriously. The core algorithms are encrypted. They're only decrypted when they're run within the software. And all the software is also protected with hardware protection called dongles, which make it it's the highest degree of protection you can to protect against unauthorized copying as well. The hardware itself is patented, and the other thing is that somebody could try to build the hardware and they still wouldn't be able to get it to work right. This is for the measurement instruments, because there's a lot of sophistication in the software in terms of how you take the raw data and turn it into something that actually makes sense for the measurements. It's PhD level types of signal processing in there. We invented that. We're the only company that knows how to do it. Nobody else knows.
Mm-hmm. Cool. Tell me about the team. Who are you guys? Like, maybe a bit of your background and some of the key members of your company.
Okay. Well, so myself, I'm an electrical engineer by training. I started my career quite a while ago when I still had hair at Bell Northern Research and then Nortel Networks. BNR was Nortel's and Bell Canada's R&D subsidiary. Then I got a great job offer to come to Vancouver, and I happened to really like skiing. I taught, actually, and sailing, and there's not too many places in the world where you can do both. So I joined a company called Norsat International, which is in satellite communications. Mm-hmm. I ran ultimately the marketing and sales and business development for all the commercial products there for a period of time. I also was involved in a turnaround in Silicon Valley later on in a company called Adept Technology, which is now part of Omron. This is a robotics company, and they're based in Pleasanton, California. I was brought in initially as a consultant to help with strategy for the turnaround. And then I joined as the VP of Business Development and the General Manager for Canada. I introduced was involved in the introduction of 2 new products there. One, my team in Canada did, which is now the flagship software product that they have for using machine vision to guide robots. You need that if you're doing things like packaging chocolates, because you have to know where to pick the chocolates up from and where to put them at very, very high speeds with a robot. And also what was the flagship industrial robot, which is actually used in a lot of those applications, which we licensed from the University of Montpellier in France. And I was the guy who was brought by some people who said, Gord, you have to come and see this, and saw this thing at that university. I was the first one to see it. And I said, okay, we got to have that. So, and that still does very, very well for sales for the company, as I understand. That's where I got exposed to the solar industry, and I left that company and founded Aurora because I saw something not being addressed in the solar industry that Adept wasn't set up for, but was really, as it grew, going to be badly needed in order to really professionalize and make profitable this industry. Now the team. So I wouldn't be here talking to you if it wasn't for the team. One of the more significant people we have is a guy named Swan. So Johnson is one of the foremost experts in the industry. He got his PhD at the University of New South Wales in Australia in photovoltaics under the guy who's known as the dean of the whole industry. The guy who supervised him as the head of that school, and also invented the current technology that's the mainstream for solar cells. Johnson was the head of the characterization, i.e. Measurement and metrology department at Singapore's Solar Energy Research Institute, which is one of the top research institutes in the industry. So he is the brains behind the software product, and also has taken the capabilities in our measurement instruments up a level since he joined us in late 2017. I also have an excellent team of software people, both that young, but also the head of that is from Creo and Alpha Technologies, both of which are really well-respected companies. Creo became part of Kodak a while ago, and Alpha is one of the biggest battery management software companies out there. Recently have a systems engineer who's responsible for how everything all plugs together and working with the customers from Honeywell's measurement division, a guy named Paul Martiniak. And the guy who's head of sales worked for me at Norsat, and he's responsible for all of our sales in Asia. The good thing about him is he's from Beijing, and he's worked for Microsoft China, so he's worked for big and small companies doing both strategic sales and government relations, and also small company sales as well. So he's been instrumental in getting us into China and building up the Shanghai office for us. Finally, the board. I have an excellent board. John McNichol is one of the board members, and John was the CEO of Enwave as it grew from essentially, really a very starting point to being worth tens of millions of I think over $100 million of market cap, and built it commercially. He's done that with a number of other companies prior to that, and also Kevin Dodds, another key board member, who was the CFO at NORAM Engineering, which is an engineering design build company with a lot of business in China. And he joined when it was roughly $5 million, and as the CFO, helped to grow it to $100 million in revenue. So I've got a great board to help me with building the business as well. Lots of experience, successful experience.
Fantastic. I'll take a couple questions here from the group. So you mentioned a burn rate of $250K. Someone's asking here, is that per month or per quarter?
That's per month, and it's less than 250K on average, just to be clear.
Good. Another question. Okay, so was Aurora affected by any of the Trump tariffs with China?
No, other than reading the newspaper every day and rolling my eyes. So it had an effect on me in that respect. But, no.
But not financially. Okay.
Yeah, no, I actually get that question a lot, and I should probably explain. So those tariffs are on sales of or purchases of products and panels into the American market. But here's the thing: there's no other source.
Mm.
So basically, what he's done is he just made it more expensive for people to buy these things.
Right. Yeah.
It doesn't shift the demand around anywhere.
I gotcha. This is an interesting question. Does this technology, is there potential for it to be applied to any other manufacturing processes?
We are looking into that. There are possibilities in flat panel display. Mm-hmm. We're really, we know the technology would work in those sorts of industries. The question is whether there's sufficient market potential to go after it. So actually, I'm looking into that now. So I don't really have anything more to say on that, but the short answer is yes, and we're paying attention to it.
Fantastic. But let's a little bit about share structure. I think I saw roughly 107 million shares outstanding. Can you give me a sense of kind of how much do the insiders own, and maybe just a general sense of who might own some of the other portion of the business?
So insiders and investors who are sort of almost insiders in the sense they've been involved since the very beginning own roughly 20% of that. Mm-hmm. So I'm sorry, what was the rest of your question?
Well, just a general sense. I know there's been a couple microcap funds that are participants. I mean, is it a retail holding of the balance? Is it a little bit more friends and family, like you mentioned, or just give us a lay of the land?
I would say at the moment it's primarily retail. We have activities going on to, as we build the value in the company, to move that to both strategic and institutional components as well. Mm-hmm. Within this industry, there's not a lot of cross holdings that you see in the industry between companies. It's just really not mature enough for that yet. But there are opportunities for strategic investors for sure. And also we're beginning to get some interest from specialized institutional investors who are interested in small caps. So we're looking forward to building that up.
Okay. So I mean, we're about to wrap up here. I always like to give you guys a chance to sort of leave with a parting message. If there's something that I haven't asked, or if there's a point you really want to get across to the audience, this is sort of your chance. Maybe sort of really, tell everybody what that key message is for Aurora.
Okay, well, I'd like to just mention a few quick things. One of them is those of us who are in the company, if you ask anybody, myself or any of the other people, why are you doing this? And they say, because I want to be involved in my career in a business where I am helping with green energy and with climate change. So, as an investment, we're a green energy investment. We are an investment that is making a difference for the investors monetarily, but also making a difference for the world in terms of making it a better place. So I don't go around trying to be a hero on that front, but it's nice to be able to bring those two together. The other things, why do I own my shares, and why should anybody own the shares? Well, I challenge you to find markets that grow at 25% a year consistently on average for decades. Mm-hmm. Pretty hard. This one is. The other thing is that a lot of companies, they get themselves into a situation where they're specialists or they're working on the fringes with, the high-end stuff. we're in the meat and potatoes market, which is China for this. China is by far the dominant market, and Beijing is making it that way. So it's going to stay that way. We are right in the middle of that. Our product roadmap is dynamic in the sense that we're not just trying to make one widget and stick to that. What we have is a systems view of how we're building out to address the majority of that $500 million a year market, which also continues to grow at that 20 to 25% a year rate. Our team is globally recognized. Everybody knows us. Our brand is recognized in China. Johnson, the door is open to him all the time and any of our customers, which is a great thing to have. The rest of the team is very respected as well. And blow my own horn a little bit. I think the leadership is strong, and I'll blow the board's horn and say that the board, I've in my experiences both in the U.S. and Canada as a officer in public companies, this is probably at this point the most functional and best board I've ever worked with. So I'm really, really lucky to have that. So, and I think from an investor standpoint, that's an important attribute as well. So Paul, that's really what I would wrap up with.
Perfect. So Aurora Solar, fast-growing company in a fast-growing industry. You guys are about to launch a new product that could be really game changer for you guys.
Yep.
You got a $10 million market cap. You're basically retail owned. I'd say fit in that category of undiscovered Canadian microcap. Congratulations so far on being able to take the business to where it is right now. What's your website address if somebody wants to get more information?
Yes. There's another Aurora Solar out there in the U.S. They're not us. It's www.aurorasolartech. That's Aurora Solar TECH.com.
Perfect.
Okay.
Perfect. Okay. So, listen, Gordon, I want to really thank you for spending the time with us today. If anybody wants more information, they can reach out to Gordon. Obviously, anybody can reach out to Trevor or I. You guys keep your eyes out here. I think this is one that I think if things continue to go sort of the way where we're seeing, I think China's going to come out of the market probably a little sooner than most of the other places around the world, and likely to see continued impact on the solar business. Again, thank you so much. Trev, I'll hand it over to you in case I've missed anything.
Oh, I think we're all good. And Gordon, again, I appreciate you for your time and for everybody subscribed and listening in today. And we look forward to doing it again.
And one last thing, I do want to mention again the symbols ACU on the Venture Exchange, AACTF on the OTC. Gordon, thanks a lot.
Thank you, Paul. It was a pleasure.
Cheers, guys.
Thanks. Bye-bye.